Well, will this action out of Washington actually make any difference? It's going to get the views of Robert Minikin. He's senior foreign exchange strategist at Standard Chartered. Standard Chartered raising their forecast for the yuan through 2011, blaming here, well, sustained dollar weakness and also at the same time the yuan's appreciation, or pressure for the yuan's appreciation in the United States as well. Robert, thanks for joining us. Well, what do you make of the House passing this legislation?
Well, I think the important thing to note is that although the House of Representatives has taken this step, there still is an open question about whether the Senate would approve the bill, and of course whether
it's known to be that much more friendly towards China.
It's much more divided on the issue, and I think a vote on the issue in the Senate won't happen at least until the midterm election, so that's some way off. So I think the House of Representatives step is a small step, a toughening up in the stance of the United States, but it's not the start of some major new crisis over the CNY.
How closely will Beijing be watching this, or do you think they're just going to shrug it off to some extent?
I think it's clearly an important factor. There's a clear economic interdependence between the US and China, both in terms of trade and in terms of investment in the asset markets. So it's clearly going to be important, and one factor helping to push the CNY gradually higher as we go forward.
Robert, when you look at it, the language that is being used, is it sending the right message out? Because they keep on saying the yuan needs to revalue. Surely they should be changing that to make it more conciliatory, to say we want flexibility and a floating exchange rate rather than just say appreciation for the currency.
Well, I think that China has already promised flexibility, but the issue really is that we need to trim global imbalances, and to do that, I think that the yuan does need to be on a clear appreciating trend. So I think the language has to be clear from the United States.
But isn't it a case that it's just the dollar which is really at the moment weak, and as a result, we're seeing it still against other currencies producing trade deficits in 60-odd nations?
Yeah, we're actually monitoring CNY against a trade-weighted basket, and it's notable it's actually fallen by 2.7% since the depeg, even amidst the appreciation against the US dollar. So I think we've just boosted our forecast for the yuan against the dollar, and that really reflects the broader dollar weakness rather than necessarily anything specific on China.
Right, you have changed your forecast for the strength of the yuan looking through next year as well, saying it's down to persistent US dollar weakness, and also down to the pressure coming out of Washington as well. So what are we talking about in terms of levels?
Well, what we're seeing is expecting is a very, very gradual appreciation, roughly 1% quarter by quarter. But cumulative, that builds up. So by the end of next year, we expect to see dollar CNY around 636. That's roughly a 7.5% appreciation since the depeg, and that appreciation really for CNY could be extended even into the medium term. So we think there are important opportunities there, both for investors and corporates, in terms of hedging against CNY appreciation.
Well, against it, but I mean, isn't it a one-way bet, some would say?
Well, sorry, if any corporates are exposed to CNY appreciation, they need to hedge that exposure, then they can then look to the forward market to do that, because the dollar CNY forwards price in very little appreciation in the CNY on a 1 to 2 year horizon, so there are definitely opportunities there.
What about the way that Washington's actually dealing with this? Is it going about it the right way? Do you think they'd be better off actually having concerted action, going to the international community, the rest of the G10, for instance, and saying, hang on, we all feel that our currencies are, being unfairly treated by the Chinese authorities, if you would. It's better to have concerted action rather than a unilateral action.
I think that the United States clearly will explore multinational arenas to put pressure on China. But I think it's important that when we get into the G20 forum, it's not just about economics, it's also about politics. And a number of countries naturally are unwilling to put strong pressure on China, given its broader economic and political importance, particularly, of course, in this region.
And quickly, what about the trade deficit? Do you think it would do anything, any appreciation to address that?
I think at the margin it will play some role, but in general I take the view that too much emphasis is being put on monetary policy and financial markets in a bid to solve economic problems. The United States economy will do better when it has strong industries, better products, and that's the key really, not quantitative easing or even FX adjustment.
Robert, thank you so much for joining us. Robert Minikin there, he's a senior foreign exchange strategist at Standard Chartered.